Hello guys, this is FX Bright the Trade Guru. So on this video, I'm going to be teaching you guys how to on one of my very good strategy, which is using your moving averages with your RSI. There is a way to do this, guys. It's going to blow your mind, and you're going to make a lot of money by doing this. You're going to get a lot of value for this video. So please like and subscribe and turn on the bell notification. The first thing we're going to put on in this we're going to be adding some indicators, right? So you're going to click on, for those of you guys that are new, you click on your screen, you click on indicators, then you click on this plus sign here. Then you're going to scroll down a little bit. You're going to go to relative strength index, click on it, right? And you're going to make your adjustment of your properties look like this. So you're going to put your period to be 7. So I don't know what yours is right now, probably 14. You're going to change it to 7. You're going to apply it to close. You're going to come to this part of levels, and you're going to put these levels for me: 30, 70, and 50, right? So that's what you're going to do. So you're going to go back, then you will click on done. So once you do that, your RSI will appear just below here, and you're going to see it looking like this. All right, so the next thing we're going to do is that we're going to put our moving averages. All right, so we're going to click on the screen. Also click on your indicator, come to the main window, then just close to the top there. You're going to see this moving average. So you click on the moving average, and I don't know what moving average is showing on your own, but whatever it is, you're going to change yours to 200, right? Ensure your moving average is 200. Make sure it's exponential moving average. Apply it to close. And on the style, we're going to leave the style as yellow, right? You can change the style to whatever you like, but I like to leave this one as yellow. So I'm going to click on done. All right, good. So you can see the moving average already in this side here. So I'm going to this is already an old chart, but I just want to show you guys how you analyze this market even with this strategy to become profitable. So the next moving average we're going to put in this particular place, you're still going to come here, click on the plus sign, click on the moving average, then we're going to put another moving average, and this time we're going to put a 50 moving average, right? So you don't need to do much on this one. Just come here. We're going to change the color of the 50 to red, then click on done. All right, good. So you can see this moving average 50, you can see the 200. Now the last moving average we're going to put on this particular chart is our 20 moving average. So we're going to come to the main window again, click on this plus sign, click on moving average, then we're going to change this 50 to 20. We're going to put another one. So on this one, let's just make, because our background skin is black, we're just going to make this one white, right? So you can do that for yourself, then good. So what you can see right now is all my moving averages are currently active. And if we go back a little bit to this particular market, you can see that the market has been on a very strong downtrend. All right, good. So what you're going to see in these moving averages are going to help us serve as support and resistance. Now there are different kinds of support and resistance, and I'm going to make a video for this one, and just stay tuned. Now listen, there are different retracements that has been happening. When you look at this part of the chart, you're going to see how the market has been bouncing off this 20 for a while, bouncing off this 20. At some point, it's possible for the market to break this 20 and bounce off the 50. At some point, it's possible for the market to break this 50 and even go to bounce off this one. All these are the different kinds of retracement. So this is the deep retracement, this is the medium retracement, and this is the simple retracement. Okay, so the market just does some little retracement, and at some point it might probably do a deep retracement and still come down, bouncing off. But I just want to show you guys something. So let's scroll in the chart and see how we use this particular strategy. So now you can see what has been happening. The market was able to break this particular moving average and this other moving average. So the market broke it upwards. So anytime it does this, maybe it's going to get here to find a deep retracement, or maybe it wants to break out. But nonetheless, we do not use this moving average alone in isolation. So what we're going to be looking at is also the price action to see what the price wants to do. So you can see that the price has already broken those moving averages. So I'm going to put a zone area here, so you can see that the price came up here and also broke this particular resistance zone. You can see how the market was able to hit this point, hit this point, hit this point like 3 times. So now the market has been able to break. So there is potential for the market to become an uptrend. So we're not going to trade it yet. The first confirmation we want for that uptrend is that our 20 moving average and our 50 moving average are going to make a crossing. But that is not why we will buy, okay? We are just getting a confirmation of what the trend is supposedly doing. So if we were on a sell, once this cross happens, we would come out, okay? But that's not where I'm going to. Just follow me closely now. So when the market was going up, and now it broke this particular line, it came down for a little retest and came up again to break. So at this particular point, I have now concluded within my mind, based on the price structure, that the market is about to begin an uptrend. So 2 things have happened. The first thing that happened was this cross. The second thing that happened is that the market gave me this 1, 2 and broke. Now, the only restriction to my conclusion of this being an uptrend is that there is this 200 going on here. So it's possible for the market just to get there and this guy will push it down, because obviously this is still a down. This was a very intense downtrend that went on here. So what I'm going to be doing is that I'm going to allow the market go, right? So remember, I've already been able to get this 1, 2, 3 move. So I've concluded that this is an uptrend, right? But I'm going to be wary of this particular place and see how the market reacts. Now, guys, this is how we trade this strategy. Now, look at this. When the market, all I will be waiting for is for the market to go up, come down to either of these ones, either this 20 or this 50. We're going to come down to it, and if we get an entry, we're going to enter, and I'm going to show you how it works. So the moment it does that, we are going to look at our RSI and ensure that our RSI is below 50, right? Once our RSI is below 50 and the market touches either the 20 or the 50 and gives us an entry, we're going to enter the market. Now I'm going to show you what the entry looks like. So let's scroll a little bit. So now from here you can see that the market has been able to touch this around 20 moving average, and we can look down to the RSI and see that our RSI is below 50. We have touched the 20 and now we are below 50 on this moving average. So the next thing we're going to do at this point is we are going to look for our entry. Now I'm going to show you how the entry looks like. So what you're going to do in this market is that you're going to wait for a change of character. So what you're going to do is you're going to take out your trend line tool and you're going to try to touch the immediate wicks of the candle, and immediately you see a breakout from this particular trend line, you're going to be taking your trade. So you can see how the market was unable to break it on that first move, right? So let's see what happens. Good. Now you can see that in this particular point, the market came there, hit, just have some wicks. We need a full big candle to close above. So what you see was that the market came here, gave us some few wicks, came down, and now on this particular candle that broke away from this our line here, this is where we take our entry. Now when you take your buy, because now we are supposing that this will be a very serious uptrend, you're going to take your buy on this particular trade. You're going to make sure you're going to ensure your SL is below your moving average, or your 50 moving averages. So you're going to go. So the way to take your TP in this particular trade, the way I like to take my TP, and you can also put that into your way of trading, is I like to draw Fibonacci, and I like to take my TP at 161 or 88.8, or if I'm going to hold for a very long time, I'm going to take it all the way to 161. So you can see how the market was able to go and you can see our 161 was very, very active at this point. So we would have been able to take this trade all the way to 161 Fibonacci, right? So what are we going to be doing next? We're still going to be waiting for this market to come all the way down to touch this our 20 or our 50, while we will come down to our RSI to ensure our RSI is below 50. Once we see that, we will now draw the line to get the entry. So now you can see how there was a little retracement up here while the market came down, made a little retracement here on this 20. But when we check the RSI was still above 50. We will not take that as a retracement. We want the RSI to come down all the way to below 50 and also touching either this or this. All right, so you can see, let's keep going. All right, good. So at this point, you can see that the market has been able to touch this our moving average of 20 on this place. And when we trace it down to the RSI, you can see the RSI is below 50, right? So at this point, what we'll be trying to do is to draw that our change of character line. So what we'll try to touch is those lines there, and we'll draw it like a trend line. And the moment we see that big candle break out of it like this, we have entered another buy. So this is how we enter the buy. We enter the buy once a candle breaks out of this our trend line. This is where we enter the buy. So you can take your trades looking like this. You enter the buy, and like I told you, how I like to do this type of trade again is to take, because of this retracement wasn't so deep, I would like to be taking this retracement all the way to 161. So you can see, and sometimes you can also hold all the way to 261 in small retracements like this. So when you have deeper retracement where the market breaks all the way getting to 50, you can take your TP all the way to 161. But if you're just going to be touching this first one, you can head to 161 and 261. Do you understand what I'm saying? So that's how it goes. So if Adibi this particular trade, this particular trade only stopped on this top place, maybe it didn't get all the way down to this side, would have been able to take 161 and 261. But we just took only 161 here because of this one came almost to the 50, right? So, and you can also try to modify the strategy as best fits for you. So we're going to just take a few, one more. Let's see how it goes. So now we are still looking at the price action. Okay, now you can see something. Price has been able to touch this our 20 moving average, and if we trace it down, you can see that price went below the 50 RSI. So what do we do? Like I said, we're supposed to draw a line, a trend line, to understand the change of character. But you can see that the price action wasn't really giving any line to draw. So we're just going to be patient and see if the price action is going to give us something to draw, so we can see a change of character. So you can see how the market has been going. So what we're going to be doing, so you can see the market forming something that looks like a triangle of some sort, like so if we draw that line, you can see how the market was should I say ranging, or should I call this a flag pattern or something like that? So you can see how the market was doing something like this. So I'm going to be waiting for the market to break this. Remember, we're in an uptrend. The market should break this to the top direction. Then I will be able to enter. So you can see how the market was able to break this, break this trend line all the way to this point. So at this point, we're entering a buy trade. And once you enter such a buy trade, like I always tell you, you're going to pull out your Fibonacci again, and you're going to take the buy all the way to 88.8 and 161 Fibonacci. So let's see how this particular trade went all the way. So you can see we're able to get our 161 Fibonacci on this place. So guys, I don't want to make this video too long, but I hope you were able to understand how to use the moving averages and also your RSI. You see, in also a combination with Fibonacci, everything comes into play, guys. So hope this video was helpful, and I will see you guys in my next video.